Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and how we can look forward for a better trade for the next week. Right? So, this is analysis that is for the week that is starting from April 25th, Monday, tomorrow, 2022. So, let's dive into the charts and see what does the weekly chart show. So this is Nifty on the left side, and right side you have Banknifty charts on the weekly time frames. So weekly it's showing that it's an indecisiveness in the Nifty. It's a very small body doji candle, right? Very small body. That's the selling, the bull fight and bull and bear fight is what is exactly happening. But look at Banknifty. What is it? It's a bearish candle, wide range bearish candle with a gap down, right? In the Nifty also it's a gap down, but it ended up closed as indecisive doji. So there is overall bearishness that is that's evident, with Nifty a little bit indecisive on a weekly basis on the medium term. Let's look at the daily charts. What do they say? So daily charts, if you see that 5 days, this is the move that happened, right? It made a big down move and 2 weeks of up move, ended up with a retracement last week. Last day, I mean, right? So it's like this what you see in the down here is the last entire week's daily charts, like 1, 2, 3, 4, 5 days, right? So what exactly happened is Monday and Tuesday it went down, Wednesday and Thursday it went up, and Friday it fall back. Same thing in Banknifty also. It was a down, clearly a down week on Banknifty, and Friday it was big selling that happened, right? Similar to how it was happened on Tuesday. So that's what. Let's look at another view of the Nifty and the Banknifty, right? So Banknifty or Nifty, you can see that it has given up all the major supports, right? It has fallen up to supports and closed below the 20 DMA, right? Banknifty also has given up all the supports and then given up to the DMA. It is a breakout that had happened earlier on the weekly charts, on the daily charts if you see with a flat breakout, but the move, the point did not sustain, it has fallen back to the channel. Banknifty also, the breakout had happened, and with the two very bullish weekly candles, daily candles that you can see here, big, very wide range, and then after that, it was a big fall that happened back in the channel, right? And last week it had given up the supports of the moving averages as well, right? Now Bollinger Bands, you can see that it is nothing but sideways consolidation is what you can see here, right? Bollinger Bands are showing nothing but a consolidation, right? See, the contraction of the volatility also has happened. Look at the width of the bands from the moving average. It was very wide, a few months back, right? You can see now it has squeezed, and the contraction of the volatility has happened, so volatility is reduced, but you can also see that there is this clear consolidation that's happening, sideways movement with the bands moving sideways on both indices and with a bearish bias, no touch. So bearish bias is because it's it is facing resistance near to the median and it has fallen back, right? Because of the last week's movement, it is turned bearish biased, but overall it's a sideways consolidation on a both side view is what we get from the Bollinger Bands. Now support resistance levels is right now it is close to 17,200 and 7,300, that band, and that's given up that actually. So the first support actually would be at 17,000, which is a rounded number, as well as the previous retracement level, and 60% of the last swing as well. If you take this swing from the previous top to the last, then you can see it's a 17,000 is also very crucial. It's a 50%, not 61 Fibonacci level. So 17,000, if that is also gone, then you come back to the 16,800 to 16,900 Fibonacci 38. So remember that we had given up that, and then last week Tuesday itself, and then recovered from that, but looks like it may be heading back to that place. So 16,800, 16,900 Fibonacci 28 retracement level also is given up, means you go back to the 16,700, 750 and then 16,550, 16,650 and then 16,650, 16,450, which is a Fibonacci 50 retracement levels, right? Similarly, in the resistance upside, if 17,200 is clear, 200, 300 is cleared, then you have a gap resistance that is there at 17,350 to 17,400 levels. Above that, you have 17,500 to 17,600, which is Fibonacci 23, and then after that, 17,800 to 850 levels. That's Nifty. Bank Nifty, the supports and resistances, if you see, right now the first supports resistance would be 36,300 and 36,800. That Fibonacci 38 retracement, that zone, and then above that you have 36,900, that 37,000 nearby levels, and then once that is cleared, you have a gap resistance there. So 37,500 Fibonacci 23 retracement also, that is clearing that would be very crucial. And above that you have 37,700 to 37,800 and 38,000, 38,100 levels, and above that 38,350 to 38,500 levels. So after that you have 39,000 and then 39,500. So clearing 39,400, 500 is very crucial for the price action point of view of clearing of clearing out the previous lower high, lower low, lower pattern, right? So 39,500 is quite far away, if you look at from here, right? So but the downside, the support would be 35,600 to 35,900 levels, and if that is gone, then you have 35,000 levels, which is Fibonacci 50 retracement also. Then downs after that you have 34,350 to 34,750 levels. If that's breached, then you come back to Fibonacci 61 level of 34,000 nearby levels, which is also happened to be having a support of the window gap also. So that way it's crucial to look at the 34,000 on the downside and 39,500 on the upside. Similarly, Nifty, it would be 18,350 above on the upside. First it would be 17,500 clearing, then 17,800 major levels I'm talking about. So 18,350 levels downside. Similarly, what is crucial would be 16,400 that you have to watch out, right? Those are the levels on it, the support and resistances. Now moving to the momentum and the trend analysis. Momentum is it's sideways and falling, right? On the Nifty, it's sideways and falling on the Bank Nifty also. So it's a sideways momentum and it is falling in the falling mode, you can say. Divergences are not seen as of now, but coming to the trend analysis, using the ADX, if you can see that it has turned to bearishness, on the short term as well as the medium term. It has turned to the DMI negative zones and it's still there, but that bearishness is not having big strength. It's still a weak strength movement that has happened. So, but the trend overall has crossed over the bearish zones. Whatever we gained the previous week is gone, is no longer valid, right? So the momentum is has not gone into the bearish zones. It still maintains that sideways movement because it's consolidation that is happening. This is what we are talking about. You can see that it has taken a good support near the 40 zones and then taken a bounce, and then last week was kind of some retracement has happened. Right? Same with Bank Nifty also. Right? So no divergence since it's in the sideways consolidation mode, and otherwise momentum remains sideways. Trend, and we already seen that. So this is what we are talking about, right? A bearish trend, DMI negative on both medium term and short term on both the indices. Now coming to the volatility, the next parameter that we are going to analyze. Volatility actually shot up slightly to 3%, 18.35, but still maintains that level below 20, which is a good thing, right? But overall, if you see, the volatility was up last week, so you have to be cautious. Anything could take it easily to about the 20 levels and then upwards. So that would mean that it's going to be even more volatile for the coming. Even now with this 18 nearby 20 levels also, if you see the intraday price action, it's pretty much very volatile. But about 20, it may turn out to be even more. And open interest data analysis, if you are going to see that in the next slide here, right? So open interest analysis, the futures open interest analysis is what we have to see first. So that shows that there is some bearishness overall. Like it's long unwinding build up that has happened on the Nifty, but Bank Nifty clear short build up has happened. Right? Long unwinding is people who are long is now unwinded the positions and going short. So that is also an opposite of short covering. So that's also bearish kind of. So futures OPY is showing bearishness, Open interest analysis levels, support and resistance, maximum call put writing. We'll see the next slides, which is for the April monthly expiry on 28th. For that put call ratio, if you see, you can see that that is also not bullish enough with 0.72 for the Nifty, and 0.57 is very close to bearishness actually, right? So put call ratio is also not very correct. Now looking at the levels, you can see overall it's having higher maximum number of put call writing that you can see there. Maximum resistance is what you see, so it may be so that's exactly what the charts are also saying. So the unwinding of the put positions has happened, you can see on the Nifty, and some unwinding has happened on the Banknifty also. But this is, there are many more, 3-4 more days that are left, so things could change. But as of now, the levels are saying that the maximum put and call rating is between 17,000 and 18,000. That's 1,000 point range. Second level of support and resistance can be seen with maximum put and call rating at 16,000 and 70,500. And 36,000 and 37,000, 1,000 point narrow range is what the highest put and call rating is seen highest. Then after that, 35,000 and 36,500 is where the maximum put and call rating is seen the second level. 0.57, as we have seen, put call ratio is bearish, very close to bearish, not actually bearish. It has gone to 41 kind of levels also earlier. And 0.72 bullishness for the Nifty that you see is also not that great. Futures wire build up also bearish, as we have seen earlier. So that's about volatility and open interest analysis. Moving on, we see that sectorial performance, how it had, what happened like last week. So IT was down, down once again, even more down. That's what 5.7 is a big fall. Bearishness is what we saw. Last we saw overall it's a bearish on the side, short term, and then and the long term, on the medium term it is slightly better. It's still made in sideways. So stay away from IT for now. Metal still maintains the bullishness in the medium term, but in the daily term, that's on the daily charts, you can see that it is still side. It is slipped to the sideways zone. So it's better to stay away until the weekly also but short-term momentum also catches up. Right? But risky, cautious long positions could be taken. Same since the weekly has not broken down basically. Auto sector, if you see, it's closed nearly 3% up. Probably the only sector that went well last week was that. But momentum is sideways on both the medium term and the short term. Pharma was down 1.5%, FMCG 1% down. Reality was 3.5%. So second highest fall has happened to the IT, it has happened in reality. So overall down moves and sideways movement is what you see all these things in the short term. So stay away from the short term, unless you go stock specific. So the top down approach of picking up the best stocks from the highest performing sector may not be possible because it's all sideways for all, and some bearishness in IT, and so sideways momentum overall on the short term is what the sectorial analysis is showing. So this is what we are talking about in charts. You can see IT is closed red, metal is closed red, and auto is the only sector that performed, but it's at a crucial resistance zone. We have to see whether it will take out that or not. Pharma is also going down, but it's at a major support zone. We'll have to see whether it will break down or not. Momentum is sideways for the all. For IT, it is on the weekly, it's on the edge of the taking a support. Whether it will take a support or break down, we'll have to see. Right, so overall momentum is sideways on all these sectors except for metal, which is in the medium term, it is maintaining it. There is a bullish divergence also. So metal can take a support at this level in the momentum and then bounce up from here. It can happen, right? If it doesn't happen, then medium term also will turn to sideways, and then we'll have to stay away from it. We'll have to keep a close watch on the only sector that's closer to bullishness, which is metal. Auto did well, as I said earlier. Right? Pharma sideways, reality is down sideways momentum. FMCG also sideways momentum on the medium term. So overall, that's what sectors charts are showing. Now index heavyweights, if you see, it's the HDFC, it's the heavyweight of HDFC has shown such a wide bearishness and just now taken a support at the previous support zone. The question is whether it will give up this level or not is what you have to see. Most likely it is given the last three big mega down move that has happened in the HDFC, it may be consolidation that can be expected. It has taken a momentum could take a momentum support also, and then slowly move upside on the momentum. That is also possible, but It was big downfall, and now at a support zone is what HDFC. Same with, but in the case of HDFC, previously we were talking about HDFC Bank. Now HDFC, you can see there is also a big downfall that has happened for the last 3 weeks, but it has given up the support zone also. Both supports that zones are given up. Now Reliance, the only sector that was the only heavyweight that was really performing was Reliance. You can see that it's a cup and handle breakout. Right, the handle breakout has happened. There is a flat pattern breakout also, and it has made a taken out all the major resistances, and it can further go up also as per as the candlestick patterns are concerned. So it's a big look at the width of the candle. It's big mega bullishness that you see in the Nifty. Momentum also on the medium term, which has slipped to the bearishness, has now sideways movement has now climbed back in the bullish zones. Right, little cautious because big up moves happened, but flag breakout has just started, so it could move further up, consolidate, and then further move up. All these things can happen, right? So bullishness continues on the lines, while bearishness continues on bearishness, and at support movement is what you see in the HDFC twins. The next heavyweights, IT has given up and big gap down has happened. IT has TCS also big gap down, but it recovered and then moved somewhat green. It's a major support zone, so it's not likely to break that. It had slipped down the channel also, but recovered quickly. If you also it's kind of listening after the big weekly downfall that happened last week, right? So it may catch up, but overall the sideways movement is what you see for both. With Nifty, almost reached the RSI 40 support zone where it can bounce from here, possible. ICICI Bank was showing good movement till last week's, well moving in a channel and broken out of a major resistance zone. It seems like it's seeing some spelling pressure to this previous resistance area. So we'll have to keep a close watch if these two lines, they are the resistance zones that are there immediate before there is a major resistance previous. So these levels, wherever the previous resistance zones are there, you have to be cautious. But overall, the momentum was also catching up in the middle, and ICICI was doing good. So we'll have to keep, watch whether it is reached the main channel top and then trying to trace back, or is it going to break out from this channel top area or not. It's very crucial to have a close about yesterday's candle, right? So that is very crucial things to watch, right? So that's ICICI. Comparatively, it was performing heavyweight. So probably ICICI Bank and Reliance were only two stocks were performing, right? Because IT was not doing good and banks were not doing good. So coming to the Kotak Bank also, you can see that it has taken a support, and it is a very good support that it has comfortably taken earlier multiple times in the last several months or weeks, and that is exactly what it has done. It has taken a support from there and then bounced slightly up, so it may be consolidating. Momentum is sideways on the Kotak Bank. So banks are all not doing good. IT was not doing good, but banks, ICICI was doing okay, and Reliance extremely bullish. Now coming to the institutional participation, you can see that Fyers was selling 18,400 crores in the cash last week. Right, 5 days, 18,400 crores. Heavy selling, 6,000 crores, 5,000 crores, 2,000 crores, 3,000. That's the kind of selling that it happened. Domestic institutions were buying, but did not not able to catch up with that gap. 14,400 crores of buying has happened. Net longs and derivatives also has moved flat last week, if you see. That's a little worrisome that the FI is not stopping selling. Now looking at the US markets, you can see that it was 2 to 4% down. The US Dow Jones, Nasdaq, and S&P 500 and all this, 2, 3, 4% kind of downfall. Bearishness. It is now at its previous support zone. Whether that support zone will break or not is the question. Right? Whether it will take the support back at the same place where it had taken previously multiple times, or consolidate and then further move up again, or would it break that is crucial. It's very important. We'll see the charts of that here. See, Dow Jones is at a crucial support zone, right? This channel also is there. So whether it will breach this channel and then create another candle closure at this point, this is weekly charts, is something that we'll have to keep a close watch for the next week. And S&P 500 also is falling down, Nasdaq also is falling down, so yeah, but it's all very closer to the support zone, so that support is what we have to watch. Dollar index, if you see, it is shooting up, and then another 0.5% of up more that happened last week. So it's 101.1, and it looks like it is heading to the next major resistance one at 103 plus. So dollar is strengthening and moving up, right? Dollar index basically. Now USDINR, if you see, you can see that rupee is weakening. It has again moved up. The USDINR currency is moved up green last week, and rising momentum is what we see, and 76.49 is what the conversion rate of a USD dollar and INR Indian rupee is now. So rupee is weakened, and seems like it is heading towards the previous 77 nearby levels. But hopefully there may be some RBI intervention that may be happening, which may pull it off eventually. But the thing is that rupee is at a very historic low levels. Crude oil slightly down 4.2% last week, but it still remains above the 101.4 kind of levels. Earlier, remember that it had hit the 13-year high levels, but had 120 kind of levels and cooled off. This is crude oil, but then it seems like it is it was attempting to go up, and then but look at the momentum. Momentum is still in the bull zone, so there is every chance that we can go and hit back again. It does not really cooled off much, except that it just retraced after a mega move. Look at the gold. It had earlier attempted to make an all-time high weeks back, and it had failed, and then another attempt happened previous week, but seems like last week it gave up and then did not sustain, and the momentum has slipped in the sideways zones actually, right? So gold seems to be on a breakout mode itself, but still waiting for that moment to break out. Right? It is attempting multiple times and taking support at the every time it fails and falls back to the same support zones. Right? That's what the commodities, crude and gold is talking about. US markets we are seeing, dollar index, rupee, everything we are seeing. Right? So let's see the two actionables. One is Mahindra and Mahindra. You'll have to keep a close watch of this 990 kind of levels nearby, let's say previous all-time high. So you'll have to see whether it's able to break out this major resistance zone. Only then there is a trade. There's a weekly chart, entry has to be on it. So Mahindra and Mahindra bullish, not right away. Only if you see that the previous highest resistance is taken out. If that is taken out, then it's a good pattern of rounding pattern breakout, right? And then that could give a very good up move, like in the positional and swing trades. But you may get stopped out if you and if you take early entries, it may not work out, and then it may end up with another big downfall. It can happen. So the entry is only after a signal is provided of clearing previous resistance high. Only then you have to enter, not right away. Second is that Reliance Industries continue to be having enough momentum to move further up. Look at the bullish candle. So the entry may happen. It may give some small retracements, and that pullback, when you see that retracement on a shorter time frame seems to have taken a support somewhere, that is the time we have to make the entry. Just like Mahindra and Mahindra, I had mentioned, it is not a right away buy. Right away buy, you may end up into getting stopped out or having a retracement. All that is happen. So enter if you see a retracement and on a long time frame, see that the retracement is settled somewhere, right, taken support somewhere, and then slowly climbing back. The moment you see that, that is when you have to make the entry, right, not right away. So two long entries, Mahindra and Mahindra, lands for the next week. And this is another actionable for on the Nifty 50 index, an option strategy, that is a double diagonal calendar spread. That's what you see here. We are selling 16,700 for the monthly expiry and 17,500 call for the monthly expiry. 16,700 is put and 17,500 is call options that we are selling with the near to 30 levels of premium that we are selling, and then we are taking hedge portions of 16,200 and 17,950. The thing is, it is giving a very good probability of profit of 82% nearby. And also the max loss is, the risk reward is okay as long as you book the profit in 1 or 2%, 2 to 3 max. That's where, look at the range that we are getting. Nifty may not be likely to break the 16,600 in a week's time, or hardly 4 days of time. And 17,600 also is not going to happen. One thing I forgot to mention is that in double diagonal calendar spreads, you are taking the hedge portions of the next month, not this month, right? But the selling is happening, we are buying actually. The selling is happening for this month. Buying is happening in the next month. That's how it becomes a calendar spread, right? Double diagonal is because we are protecting both the sides, which had portions, right? So capital size can be depending on your, the portion size can be depending on your capital size. Sorry for that. Yeah. So yeah, risk reward also may not look that attractive, but if you target to know smaller percentage of profit in 4 days of time, instead of booking the entire profit by the end of the week, or the expiry day, instead of that, if you book profits early, it should give a decent profit, for a couple of days or 3 days of keeping position open. That too, it is fully hedged, so no worries. So the wrap up is that we had seen a good recovery of 15-20% previous weeks, but for 3 weeks or something that won't happen. But seems like it is retraced now, and it looks like there is some consolidation is what is happening, right? And another lower high swing has got created. We had seen in the charts. So there is some bearishness that has come in, but overall, if you see, it's consolidation that is probably happening. So consolidation sideways view is my view for the next week overall, but a mild bearish bias is also there because price is below the Bollinger Band medians, and it has given major supports and traced little more than what was enough, right? So we'll have to keep a close watch. Most likely it may be consolidating for the next week here and there, 1 or 2 day up and another 2 day down, likewise. Because the US inflation, Fed interest hike. Last week the news was Fed interest, the Fed news, Fed interest rate hike news, what triggered the Friday selling, I believe. So inflation, Fed interest rate hikes, Russia, Ukraine war crisis, and all of this are bearish. Fundamentally there is some amount of uncertainty that may still be there in the market. So anytime it can spike back at a volatility level that is beyond the manageable rate. And also the crude price also, you can see it's above 100, and there is a rupee weakening also that is continuously happening. Fyers continue to sell, so bearish is all around. That's why I have a mild bearish bias. And the positive factor is that market gets bought at lower levels. There is confidence of the retailers in the market. Institutional, domestic institutions are also buying good. PIX is below. All these are positive factors. The recovery happens so fast, so quickly. Right? It may be consolidation than a breakdown that may be likely to happen as per the Bollinger Bands. And all of these are positive factors, right? But you have to be cautious because uncertainty is still there. It is not cleared. That's very much evident. So 18,300 and 39,500 are the levels on the Nifty and the Banknifty that you have to keep a watch to get. It's not 18,305, it is 18,350 levels, right? On Nifty and 39,550. Those levels have to be kept close watch before we get some kind of confirmation of a further up move. Downside 16,400 and 34,000 is where we have to keep close. Anything below that may be bearishness that may be coming in as per the price action, and right. So don't take overnight risk because a lot of things are happening overnight, and then next day you may see your capital wiped out. So you will not even get a chance to adjust, right? So take positions with fully hedged positions where you know exactly how much you lose max. You still have your capital left, right, to continue following a plan system trading. So that's a wrap up. I have a neutral view basically with a mild bearish bias also as per the indicators, charts, support resistances, and price action, and data analysis and institutional participation. All of these that we had seen, I conclude that this is my view. Hopefully you also get a market view for the next day and hope to have a clear trade plan for your next trading weekend. If that helps you in that way, consider hitting the like button and then share it to your friends and colleagues and whoever We have very few subscriptions and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing.